Hi everyone, I'm Chad Shoup, and welcome to my latest video for Bank It or Tank It. Today, we're covering a company that got some exciting news last week. This is Gilead. That's our stock to cover, and the big news of the week was that their remdesivir drug, the treatment for the coronavirus, got FDA approval, and it came as a big shock because over the last few weeks, we've been hearing stories that their treatments, even though President Trump used it when he was hospitalized with the coronavirus, we've been getting stories saying that the studies on the treatment is not reducing the death rate, which is obviously one of the key reasons that we want a treatment for this. But what the FDA said is that it is shortening the time that people are sick. So it's helping them get out of the hospital sooner by taking this treatment. So it got FDA approval, and that's great news. And it helped boost the stock on the news initially, but then it kind of came back to earth. So today we're going to take a look at Gilead and figure out how this is all getting priced into the company and what to expect from the stock over the next 12 months by running through our Bank It or Tank It analysis. And a big shout out today to Asian Miracle on Twitter, who left me a comment and said, take a look at Gilead. So that's the company that we're covering today. And just a reminder that every stock that I cover in my Bank It or Tank It videos or my quick takes videos, and we go through several stocks each month, and they're all stocks that you all recommended. So someone went on Twitter or went on YouTube and left me a comment just saying, take a look at these companies. You can even leave a list, just a ticker symbol, it doesn't matter, but you just let me know what stocks you want me to take a look at. I add them to my spreadsheet where I'm tracking all these companies that you all have recommended, and then I keep covering them. Every month we go through several more stocks, so just keep those stocks coming, and I'll continue to give you insights into what you can expect from these companies by going through our Bank It or Tank It analysis or my quick takes videos. And go ahead and subscribe to my YouTube channel. Scroll below, just click subscribe, so that way you don't miss out on any of these insights into any of the stock market analysis that we provide. And just if you like the video, if you enjoy it, just click the like button below to let me know. Now with our video today on Gilead, we're going to do a little bit different because I usually sometimes tend to ramble in these and they get kind of lengthy. So to limit that, we're just going to try to cover this stock in just 5 minutes, because when we boil it all down to our analysis, there's really going to be 5 areas that I want to talk about. We're going to look at the overview for the company and just kind of what's been going on, and that's going to include their remdesivir treatment and just how all that's being impacted for the stock. And then we'll look at the fundamentals. Then we'll cover the quick comps, look at a few quick comparisons and how Gilead stacks up to some of the other stocks in the industry. And then we'll go through the sentiment, the technicals, and then we just wrap it all up to let you know what to expect from the stock in the next 12 months. So with all that said, let's dive right in so that way we can cut through this company in just 5 minutes and you'll have a full analysis to take away with you. So let's get started. So as I mentioned, the big news last week for Gilead was that they got remdesivir approved at the FDA for being the only U.S. treatment for coronavirus right now. So that's a huge step forward, not only for Gilead, just for America in general, that we have this treatment now that's going to be widely available. And so we're moving forward in the right direction. But for Gilead, it wasn't a big deal. The stock popped initially on the news, but even later that day it was back down just to where the stock had opened at. So the main reason that we're seeing that we're seeing the investors really not price this in as a big boost is because they don't make a ton of money on this treatment, and especially if it's just a one and done type of deal. So let's break down their fundamentals and figure out what's going on with their revenues and net income over the last few years and what they expect going forward. So this isn't the prettiest of charts. We can see that revenue is falling, then it started to flat line over 2019, 2020. We see a little bit of a dip up, but nothing dramatic here. Nothing that really gets you excited that you look at these projections and you're ready to buy the stock, and the net income is doing the same thing. So when we look at this company just from the fundamental level, it's lacking some key areas of growth that you would want to see in any stock, in any company, especially this is a biotech, a biopharmaceutical company that's in this rapidly growing industry, and an industry that they're benefiting from tremendously. Their treatments that they have across the board, it's not just a coronavirus treatment that they work on. They have all sorts of illnesses and diseases that they treat that they're profiting from, such as hepatitis C, HIV, liver disease, and more. So let's take a look at their quick comps to get an idea how they stack up in the industry. So we're taking a look at the market cap, the total revenue growth, and net income growth over the last 3 years, the compound average annual growth rate. And we just looked at the chart. We know that Gilead doesn't really have anything, but then when you look at their key competitors here, and these companies are showing growth. So that looks really bad for Gilead, that they're not even keeping up with their peers in the industry. They're a lagging company right now. They're behind the curve when it comes to growth. And for their market cap here, they're a $76 billion company. The mean for these companies, the average, is $112 billion. So they're a little bit below the average market cap, but you can see that they're clearly not on the higher end. These Pfizer and Merck's, they're over $200 billion. And then you got the smaller ones, Alexion Pharmaceuticals, Biogen, that are $25 and $40 billion companies. So Gilead's right here in the middle, but they're just struggling to find growth. And without revenues coming up and net income growing, they're going to struggle to increase that market cap in the years ahead. So this will be something to keep an eye on. So that's a few red flags for us here as we took a look at the fundamentals, the quick comps. Now let's take a look at the sentiment. Since their last earnings report, they actually had a loss for net income. They don't have a price to earnings ratio. So this, as a sentiment indicator, doesn't really help because it doesn't show us what the investors are going to price the company per earnings per share. But when we look at the short interest at 1.5%, it's the average for the industry, 1.2%. So there's really no overall bearish trend here of investors looking to punish this company for not being able to grow revenues, for not being able to increase their bottom line. And then on the far right, we have the broker recommendations according to Capital IQ. And on a 1 on this scale is a strong buy, a 5 is a strong sell. So the higher the number, the worse of a rating it is. But at 2.38, it's still a decent rating. It's still a buy rating. It's just not a strong buy. And we can see that the average for these companies is 2.09. So overall in the sentiment from the short interest to the broker recommendations, not too bad. And as we pull up the technicals here, we'll take a look and see how the 200-day moving average looks as another sentiment reading. So a quick look at the 200-day moving average. It's declining and the price is below it. So that's a negative indicator on the sentiment that investors are really not that bullish on the stock. And here on the chart, we can see that it's red on this relative rotation graph concept, which I introduced in my last video. But just to give you a quick refresher, green is leading, yellow is weakening, red is lagging the market, and blue means it's improving. So you typically see the rotation through those in the same order, and right now it's lagging the market. So the next area that we would expect it to go to is improving, which would be blue, and we would expect it to consolidate and head higher before it gets into leading and then weakening again. So looking at this as a lagging quadrant, we'd expect it to improve from here. And when we zoom out, I'm just going to show you that the major line in the sand that you have to have from the stock is $60 a share. This is just a massive area of support for the stock as it's pulled down here quite a bit. We had the boost. This is the coronavirus pandemic where we got a rally off of it. Then we just came right back down to these lows. So that was a very bearish thing to see. And this stock, after looking at the fundamentals, the sentiment, when we recap everything and just kind of pull it all together, it's definitely a hard stock to have on your vacant list. Now it's in the biotech industry. It's got a lot of new products in the works, a lot of products that are already fully developed, a lot of treatments that are out there and helping them make money. So it's a company that I really don't want to put on my tank it list just yet. I'm going to refrain from putting it on a tank it list today. We'll leave it as a bank it stock, but it's got to stay above $60 a share. As long as it can stay above that, I can see the stock getting back up to at least the mid-80s over the next 12 months, maybe even $90 a share. So that's all for my analysis on Gilead. This is a company that I'm reluctantly keeping on the bank it list for now. We'll keep a close eye on it though, but we know our key levels to watch and what to expect. So thanks for tuning into my video today. Until next time, I'm Chad Shoup.